Welcome to this episode of the ECFO Show, the Entrepreneur CFO Show, with your host, me, Perry Jeffries, your Entrepreneur CFO. Those who don't know me, I'm the president of a Diamond Equity Advisors, or full-service investment advisory and business consultancy firm located here in Columbus, Ohio, with clients across the country. Our specialty is being the go-to advisor for entrepreneurs, hence the Entrepreneur CFO. What we're doing today is a really quick segment. I woke up this morning, made a post on social media, said I got time today. I don't always have time, but just so happened today, I got time. So with that being said, I put out there, hey, what topics do y'all want to hear about? What do you want to learn about? And one of the ones that came through was having a 401k as an entrepreneur. Well, this is our extra specialty right here. So I want to make sure that we jump in and give you guys some flavor on this. Let's make sure, yeah, you guys can hear me okay. So jumping right into it, y'all. 401ks for entrepreneurs. Did you know that you can establish a 401k for yourself even if it's just you and your business? Let me say that again. The same 401k that you have at your job, you can establish one for yourself as an individual. Those are called individual 401ks, or what we call them for short, solo 401ks. And these are phenomenal. So in the past, we've helped individuals who typically have transitioned from corporate America over to entrepreneurship, and they're trying to figure out, oh my God, what should I do with my previous employer retirement plan? You know, I got a 401k or a 403b or a pension, or I can do something with a lump sum. What should I do with it? And a lot of times, not always, but a lot of the times, a solo 401k is a good fit for them. So let's talk about the solo 401k. It functions and acts just like the 401k at your job, and you can establish it for your business. Some of the benefits, and there's several benefits to it. One, it's still funding your nest egg. So you can transition your retirement from your previous employer to your business. And in doing that, that is not a taxable event. So there's no taxes owed because you're moving from one retirement plan to another retirement plan. So your company 401k. So now you have your company 401k plan, you rolled over your previous plan, now it's sitting in there. Now, some of the benefits. One, first and foremost, is continuing to grow your nest egg, right? So you should have as an entrepreneur, you should have a retirement plan. Absolutely, you should, because that retirement plan is going to be an asset that you can use in the future to generate income, which is what wealth is having passive income coming from an asset that can cover your lifestyle expense. So first and foremost, hear me loud and clear. If you are an entrepreneur, you need to have a retirement plan. Just because you don't have a job or you don't work your 9 to 5 anymore, does not mean that you should not have a retirement plan. You should still have a retirement plan. A 401k is an option that's for you. You have other things like SEP IRAs and things of that nature, but we're going to focus on the solo 401k. So first and foremost, it allows you to continue to grow your nest egg, which is important. Second, tax planning. So this is where we specialize in helping our clients understand this. So I'm going to share this screen with you guys here real quick. So check this out here. Boom, 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 boom. A lot of this information is right at your fingertips, right online, if you just know where to look. All right, so if you look here, I am sharing the solo 401k. Literally, all I put in is just solo 401k and typed it in and pulled it up here, right? When we talk about tax benefits, y'all, let this sink in. If you're a self-employed individual, do you not want to reduce your taxable income? Yes, but you still need to look good on paper. So you can't just come up with a bunch of willy-nilly tax deductions and have yourself looking broke, because it's kind of funny entrepreneurs play that game. Oh my God, I want to make so much money in entrepreneurship. And then when it's time to do taxes, I'm going to get all these deductions so I don't want to pay any taxes. Well, here's a way that you can reduce your taxable income, but also to maintain the asset and not try to pull together some sloppy ass taxes just to reduce your taxable income. So with a solo 401k, and this is as of 2020, I got to check and see if the laws changed in 2021. But as of 2020, you read right here, you could contribute up to $57,000 into this plan. And most of that, if not all of it, could potentially be tax deductible. So let that sink in. You could reduce your taxable income by 57,000. If you're over a certain age, over the age of 50, you can reduce your taxable income by $63,500. That's significant, right? So the deal is with the solo 401k, you can make a contribution as an employee of your business, but the business can also make a contribution as well. So as an employee, you can contribute as of 2020 up to $19,500. So literally, you could pay yourself $19,500 and put all of it into your solo 401k and have no taxable income on the personal side. But also, you can make a 20% contribution from the business based upon 20% of your net self-employment income as the employer of your business. So what is that in layman's terms? Your business income minus half your self-employment tax. So now you can put that money in as well. So that's where you can get upwards of $50,000 up to $63,000, depending on your age, that you can put away into the account. That's significant from a tax planning standpoint. So right now we got one. Yes, you know what I'm saying? You continue to grow your nest egg even with your own business. Two, crazy advantages on the tax planning side. And then three, one that hardly nobody talks about, which is one of my favorite provisions with this whole deal, is this. You can borrow against the plan. Under ERISA guidelines, the entity that governs retirement plans, 401ks, if you will, you can actually borrow from the account. It's not taxable because it's a loan. Loans are not taxable, so you can borrow. Before the pandemic hit and the CARES Act, some things changed with that. It was you could borrow up to 50% of the value of the account to a max of $50,000. Okay, that changed a little bit with the CARES Act and the pandemic. You could actually borrow more, but if we go back to, you know, saying the core of this thing, 50% of the value of your account up to $50,000. So if you have $30,000 inside your solo 401k, you automatically have access to a $15,000 loan. Okay. If you have $100,000 in there, you have access to a $50,000 loan. Now, if you have, you know, $500,000 in there, you're still going to be limited at that $50,000 typically. Okay. But let this sink in. This is a loan where the principal and interest is paid not to a bank, not to a loan shark. It's paid back to you. It's paid back to your plan. You are borrowing from yourself. You just became the bank of me. So we've helped clients with this scenario in the past where it's like, okay, you're looking to start a business. We roll over an old retirement plan, get into a solo 401k. Or you need to buy a truck for your business. You got $100,000 in your 401k. How much is the truck? You can now, okay, you can borrow up to $50,000. Maybe you don't need that. Maybe you need $20,000. You could borrow that $20,000 from your plan. Now, the principal and interest payment on this goes back to your account. Let that sink in. And a couple other advantages to this. The loan does not report to the credit bureaus. You know why? Because it's a loan to yourself. So you're getting the loan, you're getting access to capital. You determine the interest rate. Now, you can't go and be like, hey, I want to pay a 0.5% interest rate. It has to be a reasonable interest rate, right? So if the prevailing interest rate is 3.5%, you can charge yourself 3.5%. But that interest and that principal is going back into your account. Your retirement account stays intact. You're able to fund any expenses you have with capital, right? And you don't have to go through all the hoops and bells and whistles of trying to qualify for the loan. It's your money. You can borrow the money. So let that sink in. So the solo 401k is one of many retirement plans that you as an entrepreneur have access to, but you should know that this is something that's available to you. If you're interested in learning more about this, you're an entrepreneur looking to establish a solo 401k, or you're looking to, you know, figure out what to do with a previous plan, hit us up, let us know. There's a link where you can connect with us, get on our calendar, and we'll definitely get you pointed in the right direction. And if it's a good fit, you know what I'm saying, we may be able to take you on as a client as well. I hope that information was powerful to you. Again, this is kind of one of our favorite solutions that we have for a lot of our entrepreneurs who don't have employees, don't have rank and file employees. We can do traditional 401ks as well. But for a lot of the solopreneurs where it's just you, and you maybe got some independent contractors, but nobody else on payroll, this could be a super powerful plan for you to establish. One, and you got to build that nest egg up, because as we build the nest egg, and this is now an asset, this is an asset that can give you future income. Two, tax planning, a way to reduce your taxable income and not look sloppy on your taxes, like you're trying to get all of these write-offs to reduce your taxable income. You can use this to reduce your taxable income. And now you have access to capital that you don't have to go and jump through hoops and kiss to somebody's pinky ring to get a loan. And you can use that to help fund some of your ventures with respect to your business or refinance debt. All right, y'all. Perry Jeffries here, the Entrepreneur CFO. I hope that was helpful. See you next time. Peace.